Today we're going to talk about the best Forex trading system. You don't want to miss this. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Hopefully everybody's had a good start to the week. It's Thursday, we're 4 days into it, and every single day there's been at least 50 pips, if not 50 pips in each session. I have received a ton of emails. Thank you, and I haven't forgotten about you. I'm just working my way through each email and comment on YouTube. I mean, I'm seriously grateful for all the feedback and comments and questions, and I promise you I will get to all of those one by one. I've got 3 kids home, coronavirus, watching movies, doing schoolwork. It's crazy, but every day at the same time in our 12 candle window, there's been 50 pips, and we review the same basics every single day because that's the whole point. Master the basics. If you master the basics, they will pay big dividends. And if you watch these pairs over and over and over again, you're going to see the same setups. It doesn't matter what instruments you trade, the same things apply. And one of the things that we're going to talk about today is the first 3 hours. The last and the first candle of the 15-minute charts. So again, let's review our simple strategy. And I'm going to keep hammering the same stuff home because simplicity is supreme. Simplicity is what's going to enable you to duplicate and get consistent at trading. So many people struggle with trading because number one, they don't have an edge. Number two, they don't understand that fundamentals, macro cycles, all these other things, they do matter, but not to the retail trader. We're too small. We're competing against a computerized algorithm that they've probably spent millions and millions and millions of dollars developing, that's designed to steal our money. It is not a market that is actually set up for fair value in terms of fundamental value, in terms of cycles, like buying a share and holding onto it for 10 years. We're not interested in that. We're interested in about taking 50 pips out of the market once a week, really big, or once a day, and getting that consistency, getting better, mastering your craft. I mean, really, really mastering your craft. So today we're going to review that. Structure, we talk about the big picture, geometry, rectangles, double tops, double bottoms, head and shoulders, reverse head and shoulders, descending triangles, ascending triangles. Yesterday was a textbook descending triangle on the pound yen for 100 pips. Complete textbook setup. All you had to do was get in. So study those. Now, one thing I haven't really hammered home, which I'm going to encourage you to do and keep telling you to do this over and over and over again, screenshot these setups when they show up. What do they look like? What time did they occur? We're going to talk about that today. What criteria would have tuned you in? Was it at numbers? Was it at a certain time frame in Asia when they moved it? Is there a potential high or low in place already for the day? Did they hit yesterday's high or low? All those things. What day is it? Are we up high? Are we down low? What are the things that are going to give you the characteristics to immediately tune you in with unconscious competence that this potentially is an ideal setup out of the 6 pairs? So just to answer this real quickly, what pairs do I follow and why? I follow mainly the British pound crosses. Pound yen, pound Aussie, pound Canadian, pound New Zealand, pound Swiss, and pound USD. Do I occasionally look at the majors? Absolutely. But I know that without a doubt every single day, the pound pairs, one of them will give me, 1 or 2 or 3, will give me a textbook setup for an opportunity to get 50, 100, or maybe more pips. Yes, they're more volatile. Yes, they can be very tricky and challenging. But the longer you do this, you're going to step back and go, okay, today, that looks like one of my A-plus trading setups. I'm prepared to step into that and maybe add position sizing to it and really load in for that. or I'm going to earn size over time through consistency, through being patient and disciplined and confident to earn that size and know when I need to scale up to the next level, because I didn't just get lucky. I didn't just hop in on a move. I methodically entered that trade. I managed my downside. I squeezed out the maximum amount for the winner that I could get out of that trade, and then I call it a night. So structure, and then high of day, low of day, yesterday's high, yesterday's low. Critical information. We've talked about being inside the previous day's range and how that can give us a lot of information, especially if you understand the ADR and the 50 pip box increments. You can often see a 100 pip box with a 50 pip stop hunt and a 50 pip stop hunt below. So like last night on the pound USD, they went 50 pips above in the previous night's session before dropping it down into Asia, dropping it 100 and then another 50 into the US Open. So you had a 100 pip box that had a 50 pip stop hunt up top. They did a 100 pip move and then a 50 pip stop hunt to the low before shifting it back 100 pips at the open of the US session. Timings, critical. Very important that we use this information to the best of our abilities. Round numbers, without a doubt. And we're going to go through at the end of the week a best trade setup example video to highlight every single point on this chart that this week there has been some absolutely fantastic trading setups that have followed this to the T. Let me talk about the 12 candles, and we're going to hone in on a bit more on this today. The last candle and the first candle of every hour. Price confirmation, what do we need to see that would tell us that this is an ideal trading setup possibly about to happen? Okay, then of course, trade management, risk reward and trade management. Risk reward, we want a 1 ATR stop or a 1 bar stop. Somebody asked in one of the comments, what do you mean by a 1 bar stop? I mean literally, if you enter the market, there's your stop, 1 bar, 15-minute charts. The other question I received was, do you look at the hourly as well? No, I do not. I look at the 4-hour charts for my 250 pip boxes and how the market has traded around the highs and lows and those boxes. But I specifically only focus on the 15-minute charts. Why? Because tomorrow, that means I can do the same thing. The more criteria that you add into your decision making, the more likely you will have paralysis analysis or analysis paralysis, however you want to term that. So it's really important that the less variables that you have in your decision-making process, the better you will be at duplicating your results. So if you can get consistent with one time frame and maybe have a few mental reference points in your head around major quarterly levels or longer-term trends, whatever that may be, that's fine. But you need to learn to execute on one single time frame. We're going to get a bit more advanced later on about using other time frames, but specifically mastering this with the 15-minute charts is what will really give you the skill set to move forward into the other things. So trade management, you know, I had this discussion with a trader this morning. It all looks great after the fact. Now, when you look at your closed candle charts the day after at perfect playbook trading setups, the one thing that you cannot experience unless you've done this over and over and over again in live time is taking a position in the market on an ideal setup at the right time, at the right level, and then having the market sit there and flash price at you and pump and move the candles and the spreads and the icons on the platform and hover around for 15 minutes. That's a long time. And then in the last 30 seconds, 40 seconds, 5 minutes, start to pump it a bit in the direction of your trade. And then in the next candle, come back again to your entry price and maybe even go negative on you 5, 6, pips and make you sweat even though you are in the right trade. They will sit there. That's 30 minutes sometimes, maybe 45 if you're counter trending on some occasions, where you're sitting there and they will still come back And the reason they come back is because they want to get you out of a profitable position. And you can only do that if you've sat through enough of these trades over and over and over again to know that they will try and do all the things that will shake you out of a winning trade. And I've talked about putting my position in, putting my stop in, putting my target in, and just going and walking away. Because if you go to break even, that's 45 minutes, maybe an hour in some cases. I've seen it before. They will come back, especially if you're in early and the market's not, New York session might not be opening for another half an hour and you've already been in for half an hour. They could still come back and tap you out before they shift the market. You're in the right trade, but you've gone to break even too fast, or maybe your stop was too tight, whatever that may be. So it's really critical that you've got the confidence to be able to place your stop in the market and leave it there and either get profit or get stopped out. Now, there is a time to move your stop to break even. Of course, if the market moves, 40 pips, 35 pips in your 50 pip target, if you got a 100 pip target, even if the market may move 100 pips, but if after 50 it still may come back enough with the spread to tap out the original trade entry. I've had 2 positions in lots of trades where it's moved 100 for the second lot, but it actually came back and stopped me out on the second lot before it moved the full 100. So it's really important that you have the confidence, whatever discretionary method you choose to use, to make sure you get paid on a profitable trade. That is critical. Do not go through all that stress and work and effort and take nothing off the table. That took me a long time to realize. You need to get paid. I don't care if you take it off at 40. Don't let it come back 35 pips and get 10 or 12 pips on a trade where you're up 50 pips. Make sure you get paid. So execution in live time is the real barrier to entry for success for a lot of traders. This is the big hurdle that most traders never get past. I've had a lot of people talk about doing trades in live time. Now I will say this, I will trade over a 12-hour window sometimes and take 1 or 2 trades where I just constantly check the market and set alerts for price levels, and it's impossible for me to do that because in some cases, like today, there was a great trade setup towards the 3rd hour on the pound Aussie for a short. The same trade setup was on the pound New Zealand, and the pound New Zealand was probably a better trade. Shorting the pound New Zealand is a better trade than shorting the pound Aussie. Going long on the pound Aussie is better than going long on the pound New Zealand a lot of the times. And the reason is that the longer term trends support this. But I shorted the pound Aussie. They'd already engulfed it twice earlier in Asia. I took it at numbers. But what's important is that I had the confidence because I've sat through enough of very similar trade setups, which I have in my playbook, to sit there and leave that. Now, to film that live is fine, but what is that going to do for you? The question is are you going to be able to execute the trade? Are you going to hold on to that trade for 50 pips? Or are you going to move your stop to break even? One of my colleagues took that same trade and moved his stop to break even and got stopped out at break even. There's a time and place to manage that trade appropriately, to know when to hold on to it for 50 pips, to know when to hold on to it for more than 50 pips, to know when to move your stop to break even. So irrelevant of what one trader does in one circumstance, and to see them do it in live time can give you a little bit of knowledge, but it will never give you that confidence because every trade scenario is going to be different. And only you yourself are going to be the one that can execute that. And unfortunately, it's kind of like being a professional cyclist. You need to put time in the saddle to develop the strength, the confidence, and the discipline, and the ability to last over time through all the different scenarios when they present. Okay, the performance review is critical because, I myself am a bit of a lone wolf. I'm very critical of myself. I'm very critical of my performance. I have high expectations. But in a lot of cases, it's still valuable to get accountability or an outside person to help you review and support that process so that you can have an outside observer critique your performance. We tend to be biased in reality. I'm the opposite. I'm very critical of my results. I know, You know, I know when I've performed very poorly and I'm hard on myself. That's my personality. I'm extremely competitive and I'm extremely driven to achieve what I think are attainable goals. But at the same time, there's a lot of hurdles to get to that level that I want to get to. So just in you know, that process is a step-by-step system that anybody can replicate. But again, these bottom two are really key because that's where the real, you know, jump is going to occur. You can study all the closed candle charts, you can back test, you can do all those things, you can put up hypothetical results. It's irrelevant. You got to be able to perform in live time. That is the bottom line. Every single day will be different. Every single trade scenario will be different. And you yourself every single day will be different, which is why I tell everybody get the 7-step daily routine for high performance traders. Develop your own daily routine. Only you can level up to the next level. I'm giving you a playbook of very simple setups that show up every single day. There's nothing complicated about it, but it takes a lot of study time to develop that in, you know, you think about it, you look at closed candle charts, it's simple. But 15 minutes, 15 minutes, 15 minutes, 3 hours of chair time, and I've spent thousands and thousands of hours staring at screens, people telling me to give it up. Why are you doing this? It's impossible, you can't do it. You know, the market, you got to be on the inside, it's rigged, it's this, it's that. I'm telling you, the same things happen every single day. The people that have been following me, you know this now, and I'm telling you with confidence, if you stick with this, if you're patient and you're disciplined and you master this, you will be able to get the results that you're after with Forex trading. So just a simple overview, the first 3 hours, almost 90% of the time, every day, you're going to get candle formations and the entries. If you think about this in simple terms, 1 hour, 1 hour, 1 hour. The goal of them, the smart money, is to trap you in the wrong direction. And if you look at hourly charts, typically an hourly chart, whether you're trading hourly, 4 hour, those markets, you know, the 4 hour charts, if they close at 9, 1, and 5, doesn't matter where you're at, New York Eastern Standard Time, 9, 1, 5, 9, 1, 5. Those hourly charts, those 15-minute charts, at the end of the hour or the first bar of the hour will typically be the high or low of a day. The odd occasion, it might be the half an hour candle, but it's a 2-bar combination of the half an hour and the last bar of the hour. So focus your thinking on the high and the low of the day, and the last and the first hours of the 15-minute candles. This is critical information, and then we want to be looking at numbers. We want to know, are we in the 12 candle window 1 hour before? The equity opening times, okay? Asia, London, New York. It'll be within the first hour prior, the hour of the market open, or the hour after. And so if you think about what's happening, if you're inside of the high and New York opens, okay, is the hour before stop hunting back up, or is it dropping down further? And then is New York open pulling back and then continuing the move down? Or did they stop hunt high, extend it out, and then drop it down? 3 hours. 3 hours. Do they bring you up again, and then bring you up and roll it over? 1, 2, 3. We see it on the 15-minute, we see it on the 1 hour, and we see it on the 4 hour. It happens on daily charts over longer time frames, but it's really critical to focus on the last candle of the hour on the 15-minute charts and the first candle of the hour on the 15-minute charts. And in some cases, you might get a big candle at the end of the hour, or the 10:30 candle, or sorry, the half an hour 45-minute candle, and then a little candle. A big candle typically tends to be a stop hunt. It can be up on the third push, and then you'll get a little candle. That's the end of the move. It's a stop hunt. Or you might get an engulfment pattern after 3 pushes or a spike. We saw a beautiful announcement on the Australian dollar this morning that caused the pound Aussie to spike in both directions. A great example of hitting the stops on both sides before consolidating over the next few hours, which ended up being a 3-push pattern that didn't take out the high, which gave an engulfment at numbers for a 50 pip move down at the end of that third hour. So it's really important. Is it a hammer with a tail at the beginning of the hour at numbers? We see these in Asia a lot, or is it a 1, 2, 3 after dropping 50 pips, consolidating in 1, 2, 3 as we saw in the British pound last night, U.S. session. Stop hunt candle, a little bar, then another pin hammer, and then bang, 100 pips. Wait for the market to tell you when. It'll be inside of this 12 candle window, and I want you to really think about this. Be patient. If the market has been in a consolidation, it's still going to give you 3 pushes usually in one direction before shifting. If it's a trend, it will continue a move and pull back and continue and pull back and then resume the trend. Think about the hourly rotation. That is critical. We'll look at a couple of examples, but it's really important. Think about the last candle and the first candle of the 15-minute charts on the hourly rotation within that 12 candle window. Keep it simple, traders. Keep getting better, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. Just continuing our discussion about the 3-hour window and the last hour and the first candle and last candle of the 15-minute charts on the hourly rotation. Just looking at some examples from this week. We have our pink box, which is our 12 candle window on the Europe-London Open. And just to demonstrate how sometimes that it may not occur exactly in that first 12 candles, but the pattern was setting up. And when we look at the candles that form the high, this is the first candle of the hour right outside of the box. And then we come back and there's another pin stop hunt, which is the second candle of the hour, but then this little pin hammer that closed underneath the numbers, even though it's later in the session, even if you sold this first candle, which was the 13th candle, outside, you had an engulfment pattern at the high of the day, one candle outside of our 12 candle window, just above the numbers after a 100 pip move with 1 push, 2 push, 3 push. Just an example of timings. And then again in our 12 candle window in the U.S. session, the market resumed its downward trend and we had a continuation move into that first hour outside of our 12 candle window. And traders, it's really important. Numbers, timings, New York, 50 pip stop hunt, 50 pip stop hunt, pin hammer at numbers to resume the trend. But last night on the British pound, we had a classic example where the market gave us a 1, 2, 3, 50 pip stop hunt. This little candle was the last candle of the hour. When you see a big candle blow off a move and then a tiny candle and then a reversal hammer, first candle of the hour to resume a 100 pip move back up. So last candle, first candle at numbers, just heading into the New York Open. We can see where the market dropped down earlier at the beginning of the Europe session. This big bar that broke into the 100 pip box was the last candle of the Asian session, just heading into the changeover with the Europe Open. We get a little pin hammer, even though it's been below the numbers. We've broken down inside of the box. First candle of the hour, 3 hours down, sideways, continue the move into the New York Open. The pound yen, very similar setup, but I talked about a descending triangle in the Asian session. 1 push, 2 push, 3 pushes, consolidation, breaking out at the end of Asia, a pin stop hunt at the beginning of the Europe session, first candle of the hour, stop hunting traders who are in the right direction that may have already gone to break even before dropping down 50, pulling back another 50, and then 1, 2, 3. Just prior to the New York Open, the little inside bar at the end of the hour, and then bang, a shift candle at the beginning of the first candle of the hour. So again, just an example of where timings are really critical at the end and the beginning of the hour, and then also numbers. The market's dropped almost 200 pips So its full ADR has been met or exceeded. So heading into New York with a blow-off scenario and an inside bar, this is a great example of asymmetrical risk-reward opportunity. Even if you were targeting 50 pips, this is at least 3, maybe 4 to 1. So it's important to step back, have timings in the back of your mind. Again, if we go and look at the 15th, which was Wednesday again on the pound Canadian, we had data that came out that night. The market stop hunted high and then stop hunted low. So we had the high of the day, even though we were inside of the previous day's high in an uptrend. We had the low of the day. Okay. The market vectored up, 1 stop hunt candle, 2, 3 sideways, and then reversed, hitting the low, 1 push, 2 push, 3 pushes at the second candle of the hour. So again, not the first, but we're at the low of the day at round numbers, at major round numbers, 7,500, at the low of the day in an uptrend for a pin hammer long. Asymmetrical risk reward. That trade went well in excess of 150 pips. And on this particular situation, that market was about a 20-25 pip stop, which you can see had very little stress on the trader. If you hadn't taken that trade and the market consolidated into the US session, pin hammer at numbers, breakout pullback, engulfment pattern for the right side of the continuation of that move, almost 150 pips on the second leg of that trade. And that engulfment candle occurred as the last candle of that hour. The next candle stop hunts the numbers one more time, and we'll talk about this in a later video about re-entering a trade on a smaller time frame, or even, like, I personally don't use the smaller time frames, but I will get in that trade at the numbers plus the spread. Once I see that double confirmation, if I've missed it and I just happen to pick it up, I will get in at the numbers plus the spread. And sometimes I just get in because that trade has a measured move opportunity, and we can just take our high, take our low, measured move. You can see it hit 2 times expansion of this range. So hopefully that gives you a bit of insight, traders. Think timings, think numbers, think the end of the hour, unless you get something that confirms that entry prior, but end of the hour, first candle of the hour. Place your stop, place your target, walk away. Set an alert for 25, 30 pips above your entry price. If the alert goes off or 1 hour goes by, come back, cut the trade, move your stop to break even, or you're already out with your 50 pips. If you're holding on to for more, adjust your stop loss, set your alert, come back in another hour if you haven't heard the alert go off, and make a decision from there. Have a great trading day, traders. Keep it simple. Keep getting better, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.